Hello, people! Welcome to Crypto Clips. With a cryptocurrency crash, Bitcoin and other digital assets have seen steep declines this year. However, stocks associated with these assets have experienced even steeper and often new all-time lows. So, Crypto Clipper, what companies will be able to do about the impending losses remains to be seen. If you want more of this content, please subscribe and hit the notification bell. A well-known cryptocurrency exchange like Coinbase stock has plummeted over 45% in the last year, whereas VHolder dropped 65% by 2022 and Galaxy Digital lost 29% this year. Many crypto stocks primarily trade with their value representing that of the overall crypto market, according to Lionel Rebibo, CEO of Trax. The lack of correlation in the stock market and the rise in utility tokens that serve as a replacement for products is a key concern for many new investors in this space. Cryptocurrencies have not been the best pick for a long time now, so the decision to invest in them has become more difficult because of the unpredictability. The stocks of crypto companies are down significantly this year, dropping as much as 60%, and that is according to Wall Street Journal. The sales turnoff is signaling that interest has drastically fallen, and with it, values of actual blockchain products. Coinbase has lost more than a third of its value, while Riot Blockchain saw a nearly two-thirds drop in valuation. The market capitalization of publicly traded crypto companies fell from $100 billion in November when Bitcoin's value hit a record high to only $40 billion today. Maybe interest in cryptocurrency has waned and trading volumes have dropped significantly recently. After all, Coinbase, which is still leading U.S. cryptocurrency company by market cap, relies on transaction fees to make money. While cryptocurrencies aren't having as bad as of 2022, they aren't experiencing the same decline as this time last year. Bitcoin is down 12% and Ether is down 19%. Bitcoin is down about 10% this year, and stocks of crypto-focused companies are doing worse. According to FactSet, professional and everyday investors find themselves reconsidering the value at hand, with plummeting 60% from last month's $11 billion high in September. You also deserve more information about your ad choices. Visit megaphone.fm/ad choices for more information before you make an informed decision on your ad options. Bitcoin is down about 10% this year, and stock prices of other blockchain companies have fallen 60%, according to FactSet. Wall Street Journal reporter Paul Fignan joins WSJ Your Money Briefing host J.R. Wallen to discuss the reasons why and how investors are thinking about crypto in the professional and everyday spheres. In the crypto assets market, which experienced heavy outflows, also saw a huge drop in crypto asset stocks as well. The move on the stocks was probably exacerbated by the fact that these stocks were often grossly overvalued. Bitcoin traded at $42,200 at noon ET Thursday, according to data compiled by Blockworks, down 12% since the start of the year. Ether has dropped 18% over that span to about $3,100. Less trading volume has been seen because of the steep price fluctuations, according to Cris Allen, an analyst at Compass Point Research and Trading. Pullbacks from retail investors have impacted companies that derive the bulk of their revenue from trading fees on Coinbase and Galaxy, said Allen. All this talk of regulation might be causing crypto stocks to fall. For instance, European Union regulators could soon require crypto firms to disclose their transaction details, and it's an effort to curb money laundering efforts. Crypto companies are collaborating to fight new anti-crypto legislation. It's unclear how cryptocurrency firms will adopt the technological changes to these regulatory frameworks and whether their shares will be affected long-term. In spite of regulatory guidance, including the executive order mandating government agencies study digital assets, the head of blockchain at IBM does not think that any major changes will occur in the market anytime soon. The CEO and Chief Investment Officer at ARK Invest says that the gap between digital asset company valuations and stock continues to grow, in contrast to the markets. Cathie Wood was speaking at a conference this week in Miami called Exchange ETF Conference. Wood said that the $14 billion of funding was made by blockchain.com, who is now worth more than $5 billion. At the same time, she says, Coinbase came down to all-time lows. Wood states that this drop is irrational and doesn't make sense in any way. Coinbase declined to comment for this story, but executives at the company addressed its stock decline during a February earnings call. Chief Financial Officer Alicia Haas said that the stock had traded in tandem with digital assets. Bitcoin's price climbed back up above $42,000 on Thursday as global uncertainties increased short-term volatility. Bitcoin has established the pattern of following rising stock prices. With increased exposure to economic and geopolitical crisis, Bitcoin is increasingly connected to global financial markets. Minutes from the Federal Reserve's recent meeting revealed its plan to meet inflation by shrinking its balance sheet by $95 billion a month. The March Consumer Price Index, which measures changes in costs of food, housing, gasoline, utilities, and other goods, rose by 8.5% from the year before, the largest inflation surge since 1981. The war in Ukraine also continues to contribute to increased market volatility. While Bitcoin and other cryptocurrencies have seen relative increases in price this year, over a long-term outlook, there could be a significant drop in price following the introduction of cautionary measures, says Ben Macmillan, Chief Investment Officer at IBX Digital Assets. In his statement, he names 3 events that could cause a significant fall in price. Number 1, the war in Ukraine. Number 2, inflation from devaluing current assets. And number 3, Fed policy. The last time Bitcoin had dropped below $40,000 was in early March until it jumped in price by 10% to above $42,000 following President Joe Biden's signing off a sweeping executive order on cryptocurrency. Biden's exclusive order called for government agencies to create a plan to regulate cryptocurrency and to consider the creation of a government-issued central bank digital currency. It marked the first tangible steps by the White House towards regulating cryptocurrency. By the end of March, Bitcoin was hovering above $45,000 and surpassed the remarkable amount of $48,000 several times. When asked about the stock, an executive mentioned during an earnings call that the price had historically followed the assets and was not responsible for them. Albert said, "We honestly don't truly understand this, as this correlation doesn't take into account our growth in market share, the diversification of our business beyond investing, and even the future potential of our business to expand into new assets and new product streams." Though revenue from transactions still account for the majority of Bitcoin.com's revenue, the company generated more than $500 million in subscription and service revenue last year, a tenfold increase from 2020, including $214 million during the fourth quarter, shortly after Coinbase launched its trading service that imposes transaction fees in exchange for a monthly payment. On this week's announcement of the beta, Coinbase released a new system that allows for trading of crypto-based tokens. It is similar to Instagram on its social media platform. Bitcoin's peak value this year was on January 2, when it was nearly $48,000. However, it has stayed above the point that it was below in late January, which was the lowest it had been in 6 months since then. Since its November 10 all-time high at $68,000, Bitcoin has dropped 40% of its value in comparison to November with a new 2019 price point, another impressive feat considering its humble beginnings and a price of $10,000 as recently as July of 2020. Ethereum notched another new all-time high with price reaching $4,800 in November. Bitcoin's price has varied between $39,000 and $45,000 so far this week. Below are some comparison of Bitcoin's current price point with the entire price range over the last few months. In spite of the crash in digital currency, prices following its all-time high, experts still expect digital currency's price to exceed $100,000 at some point. Bitcoin's volatile price shows that it is still a highly speculative investment. Prior to this month, the original cryptocurrency set a record high in mid-April only to lose over half of its value and plunge to around $30,000 by mid-July. Similarly, Bitcoin dropped back below $35,000 this month, not long after it set another record high in November. The recent investment activity from Coinbase is indicative of their long-term goals as a company. As for this year, the company projects operating at a loss. Voyager's $165 million revenue from the last quarter drastically decreased to just $100,000 this quarter. Despite its top 10 ranking in having more users, around 3.5 million as opposed to 3.2 million, it didn't meet analyst expectations. The crypto sector is struggling as well. Marathon Digital is down 38% since the beginning of the year, and Riot Blockchain dropped 40% over the same period. Some investors believe that Marathon Digital, which owns roughly 9,400 bitcoins, is a proxy for the price of Bitcoin. This assertion comes from Charlie Schumacher, a communications vice president at the company. With everything happening so quickly in the cryptocurrency market, and with little data to show which way it may head next, experts were hesitant to make any predictions. The future of cryptocurrency is too unpredictable, and it isn't always secure, so holding onto your coins can be a great deal more volatile than ever. If you're investing into cryptocurrency, expect volatility. That's the reason why it is recommended to keep your investments in cryptocurrency to less than 5% of your total portfolio. These things tend to be really volatile because some days they change 80% and other days it can go way up. The personal finance expert Humphrey Yang previously told Next Advisor. But if you believe in the long-term potential of Bitcoin, just don't check on it. That's the best thing you can do. Just like you shouldn't let a price drop influence your decisions to buy cryptocurrencies, don't let a sudden price increase alter your long-term investment strategy. It is important to note that speculative assets like Bitcoin requires more money than your traditional retirement accounts and emergency savings to purchase. While we often do trade with Bitcoin, we are also correlated to Nasdaq, which is down 15% year to date. If investors reallocate their portfolios and go risk off, they go risk off across the board, and that impacts large Bitcoin miners like us. Marathon is trying to raise 23.3 exahashes of computing power by early next year. Though it also plans to launch a research lab and an incubator, Marathon is focusing on its bread and butter of mining to create revenue. There's much skepticism about the outlook for mining companies like Marathon as they aim to grow by 500% in just over a year, according to Scott. The industry is trying to prove that this projection is doable with their performance projections alone. Bitcoin's recent spike in price has not been as surprising as some may make it seem. Nevertheless, a similar occurrence has happened in the past, and there is a general upward trend that appears to be leading to a spike this time. Investors should continue to invest in companies like Facebook, despite the fluctuations like that of Danielle, who says she is not jumping on the hype. Emotions around cryptocurrency should be kept at bay, with emotions staying out of the equation. Rebibo thought that in the short term, there was unlikely to be anything companies could do to counter stock price declines in the wake of crypto prices falling. When a company is clearly tagged in a certain sector, its stock will strongly reflect the fundamental drivers of this sector, whatever the company does to differentiate itself, Holt said. Representatives for Voyager and Galaxy declined to comment on their stock price, whereas a representative for Riot Blockchain did not respond to a request for comment. Believing that the UK's regulatory approach to Bitcoin and its underlying blockchain technology was too hasty, some high-profile businesses decided to leave. Concerned by the stampede towards cryptocurrencies in early 2017, Britain's financial regulators are adopting a more cautious approach when it comes to digital coins and actively encouraging financiers to relocate their operations overseas. It is hard to change culture in a large organization like the FCA overnight, but we should probably do that, says Ian Taylor, head of Crypto UK. The Financial Conduct Authority has not publicly released clear regulations across the board, and 100 companies that do not meet its standards for anti-money laundering procedures have been stuck in a registration hell. In recent times, an investigation has begun into how blockchain technology could streamline in traditional financial market infrastructures. When a company is found to not meet the standards for registration, regulators are clear with them what they are doing wrong. According to the regulator, the money laundering regulations do not include a provision that would allow firms to withdraw their applications. However, in some cases, regulators may allow firms to withdraw end operations, make adjustments following feedback received, and reapply. Those that do not withdraw will be issued a formal decision they can appeal through an administrative procedure or through a legal process. All the upswing on cryptocurrencies may potentially be a catalyst for mass adoption. The hope is that not only will this happen, but it will happen in such a way that crypto's mainstream adoption draws more investors into the market. Sadly, this does not bode well for Bitcoin bulls on the whole. In fact, Bitcoin searches have declined year over year for quite some time now. There has been a similar pattern seen in machine learning-based search interest, as seen with the Ethereum smart contract platform. The peak searches occurred during week 2 of May, and the interest decreased ever since. For ETH, the low point on search interest was in December 2022. With the fall in retail interest, it is likely that investors will have to reevaluate whether the next mass market wave of interest has already passed. The decline of retail interest suggests that investors should reassess where large market surges will come from in the crypto and stock markets going forward. And that's it for this video, Crypto Clipper. Remember to subscribe to our channel, and if you feel like we've delivered value, please share this video with one person. That's right, just one person as a token of your appreciation for the hard work we put into making content that educates and helps you on your mission of building your own fortune. Remember, you can watch video after video, but it isn't until you actually take action that you start to see results. See you soon!